Welcome to the deep dive. Today we're plunging into, well, the pretty dynamic world of Bitcoin and the broader crypto market. You've probably noticed Bitcoin's impressive recent run, holding steady above $119,000. And maybe more importantly, pushing past that key resistance near $120,000. It's a significant rally, right? And it's tempting to just see it as, another surge. But beneath the headlines, there's a really nuanced story unfolding. We'll be exploring what's truly driving this momentum, what critical economic data is just around the corner, and actually what this all means for who's really leading the crypto charge right now. It's quite fascinating.
It really is. And what's fascinating here, I think, is that this isn't just some random bullishness. It feels more like a structural shift. We're seeing specific catalysts at play. For starters, strong inflows into Bitcoin-related exchange-traded funds, the ETFs.
The ETFs. Always a big topic.
Exactly. And they aren't just about new money coming in. They show that traditional finance is building this legitimate low-friction on-ramp. It opens things up for a much broader investor base. This isn't just a trend, It really speaks to crypto's growing legitimacy and its integration into, well, mainstream portfolios. And tied to that, there's a clear resurgence of interest from large institutions.
Right.
Plus, just a generally positive vibe sweeping across crypto and even the equity markets.
Okay, so we're seeing these strong inflows, institutional interest. But how durable is this? I mean, are these institutions really committing, or are they just sort of dipping their toes in, maybe waiting for a pullback? What's your read on the stickiness of this capital? Is it here to stay?
Yeah, you've hit on a really critical point there.
Yeah.
Look, no market move is ever guaranteed, right?
Yeah.
But the sheer volume and honestly the consistency of these ETF inflows suggests something, well, a bit more profound than just quick speculative interest.
Okay.
It points towards, I think, a longer-term allocation strategy. Sophisticated players integrating crypto as a genuine asset class. And that kind of capital, it tends to be stickier. They're often looking at multi-year horizons.
Which helps with stability, presumably.
Exactly. It contributes more to market stability rather than just those quick in-and-out plays we sometimes see.
Got it. Now, as if the market wasn't already kind of on edge with all this institutional movement, there's a big macro event looming. That's the upcoming U.S. Consumer Price Index, the CPI report for July. The big one. Yeah, and we're already seeing its shadow, right? Specifically, this wave of what people are calling hedging activity in the derivatives market.
That's right.
You see traders putting on protective Bitcoin put options, particularly around the $115,000 to $118,000 strike prices. Now, this isn't just jargon, is it? It's a clear signal that some major players are essentially buying insurance.
Insurance, yeah, against a significant downturn.
Betting that Bitcoin might test or maybe even fall below those levels if the CPI report comes in badly. But given how resilient Bitcoin's been, holding above 119K, are these traders maybe overreacting with these puts? Or is there a real risk here?
Precisely. The market is definitely reading the tea leaves on this CPI report very, very closely. The stakes for Bitcoin are, well, there couldn't be higher, really. If that CPI number comes in hotter than expected, it could signal a delay in those anticipated U.S. Federal Reserve rate cuts.
Which everyone is watching.
Everyone. And that scenario, it introduces potential downside risk. Not just for Bitcoin, mind you, but for other high-risk assets right across the board.
Because tighter money chokes off liquidity.
Exactly. It tightens liquidity and risk appetite. Now, conversely, if we see a soft inflation print, meaning inflation is lower than people expect.
The flip side.
Right. That could really add fuel to the fire for Bitcoin's upside. We'd be looking at key resistance levels, maybe around $122,000 to $124,000. So traders aren't necessarily overreacting. They're just positioning themselves for what could be a make-or-break moment for risk assets generally.
Okay, that makes sense. Hedging against a known event. Now, while Bitcoin's grabbing the headlines and everyone's bracing for the CPI data, there's another really fascinating subplot developing. A kind of subtle but maybe significant shift in who's actually leading this crypto rally.
Yes. This is interesting.
What I find particularly fascinating and maybe a bit counterintuitive is that the recent strength hasn't really been led by Bitcoin itself. Instead, it seems to be driven primarily by major altcoins, specifically Ethereum and Solana.
That's right. They've shown remarkable strength.
Which is a notable reversal, isn't it? Usually Bitcoin leads the charge.
Typically, yes.
But here, these altcoins seem to have, in turn, helped lift Bitcoin higher. What does this unusual leadership dynamic tell us? What's going on there?
Well, this altcoin strength, it isn't just about individual assets doing well. I think it signals something more fundamental, maybe a maturation of the crypto market itself.
Maturation how?
It means capital is flowing into different layers of the blockchain stack,
Yeah.
from foundational protocols like Ethereum, which powers this huge ecosystem of dApps,
Right, the smart contract
and
platform.
high-throughput networks like Solana,
Oh.
known for its speed and scalability. So it suggests the market is starting to value utility and diverse applications more, rather than solely focusing on Bitcoin's store of value story.
Interesting. So diversification within crypto itself.
Exactly. And this diversification, it potentially makes the whole ecosystem more resilient by spreading risk around. But it also maybe makes it more complex to navigate for investors who are just used to Bitcoin being the dominant force.
True.
It's a sign, I think, that the market is evolving beyond just its initial digital gold phase.
That makes sense. But, some might argue that more institutional interest, like we talked about earlier, also brings potentially greater volatility.
That's a fair point.
I mean, large funds can move significant capital very quickly. Do you see that as a potential downside to the sort of broader health you mentioned?
It's definitely a valid concern. While institutional money can bring stability through that long-term allocation we discussed,
Yeah.
it also introduces the potential for larger, maybe more synchronized movements,
Yeah.
both up and down,
Yeah.
as these funds react to macro signals or just rebalance their portfolios.
So bigger swings, potentially.
Could be. So yes, it could introduce new layers of volatility. However, I think the overall trend towards a more diverse set of leading assets like ETH and SOL
Uh-huh.
and a broader institutional base still points towards a more robust ecosystem than we've seen in previous cycles, even if it's occasionally more complex.
Okay.
And if we connect this to the bigger picture, analysts are certainly optimistic if this positive momentum holds. They're eyeing further upside targets for Bitcoin, maybe $135,000, perhaps even $138,000 down the line.
Wow, those are some big numbers.
They are. And it's also worth noting the overall market cap for all crypto assets has impressively climbed back to the $4 trillion mark.
4 trillion.
Yeah,
That's huge.
it really is. To
Yeah.
put that in perspective, that's bigger than the economies of quite a few countries.
Makes you wonder how long traditional finance can really afford to ignore the space, doesn't it?
Absolutely.
So, all right, our mission for this deep dive was pretty clear. Unpack these interconnected forces, understand the indicators at play, and really highlight what you, the listener, need to know to stay informed, to understand Bitcoin's current path and the wider crypto landscape. And I think we've certainly pulled back the curtain on some fascinating dynamics today.
So as we wrap up this deep dive, let's quickly recap the core nuggets we've uncovered. It's been quite a ride. We've seen Bitcoin holding firm above $119,000. Driven, importantly, not just by hype, but by a real structural shift.
The ETF inflows, the institutional interest.
Exactly, that growing, stickier institutional capital, signaling crypto's increasing legitimacy.
Right.
We also highlighted the critical influence of that upcoming U.S. CPI report, how sophisticated traders are already hedging their bets.
Buying that insurance against potential downside if the inflation data comes in hot. Yep. Using those put options. But maybe the most significant takeaway today, or at least the most surprising.
The altcoin leadership.
Yeah, that shift where major altcoins like Ethereum and Solana are actually leading the rally, even helping lift Bitcoin itself.
Which, as we discussed, signals perhaps a fundamental maturation of the market, moving beyond just Bitcoin dominance.
Right.
And it's crucial, I think, to reiterate how all these pieces, the institutional interest, the ETF flows, macro data like CPI, they aren't isolated. They're deeply interconnected, constantly shaping how digital assets move.
You really have to see the whole picture.
Understanding those relationships is absolutely key to grasping what's happening and recognizing that this ecosystem is evolving in really complex and interesting ways.
Okay, and that brings us perfectly to our final provocative thought for you to chew on. If altcoins like Ethereum and Solana are truly leading the charge now, maybe even influencing Bitcoin's price,
Yeah.
what does that really signal for the future?
Good question.
Is this a sign of a maturing, more diverse market developing strength across different assets? Or could it be that we're entering a new, perhaps less predictable era?
An era of maybe more volatility, shifting leadership within crypto.
Exactly. What might this mean for the very structure of the crypto market going forward?
Something to definitely ponder.
Definitely something to think about. We'll leave you with that until our next deep dive.